All right, welcome to tonight's webinar. I want to thank you for coming and attending. I know you could be doing something else or be somewhere else, so I'm appreciative of you being here. Tonight I'm going to be talking about some high probability trading, and we're going to be using a setup that I haven't really shown a lot of people, and I want to go ahead and go through this, and we're going to use some slides, and then we'll go to the live charts. And after that, we'll go inside the website, let you guys see inside the website. So we're going to get started. Bear with me through the slides, and then we'll try to get to the live charts. But everything is relevant here, so the charts and the slides are important. So it's going to take some time to learn some stuff. All right, guys, so what is a high probability trade? So when it comes to trading, any trade with a high degree of likelihood of success would be considered a high probability trade. So what makes a trade high probability? Is it the profit that you make? As you can see, this trade worked out for me for 248 pips. So was that considered a high probability trade? It could have been, depending on the way I entered the market and everything else. Just because you make big profit doesn't make that a high probability trade, all right? So basically your high probability trade will start with your trading plan. So that's going to be the number one thing that you need to have is a trading plan. And a trading plan is going to outline the steps you will take when evaluating, executing, and managing your trades. There is no single approach. Carefully consider the following when developing a trading plan: your risk tolerance, trading instruments, time frames, position sizing, entry rules including your setups and triggers, and exit rules including profit targets, stop loss, and money management. So today we'll be focusing on the entry strategies. The entries and exit will be one of the most important aspects in determining whether you are entering a high probability trade setup. Our high probability trade setups are based on what our members here at FX at One Glance call LST, which stands for the level, the signal, and the trigger. So in order for the trade to be high probability, we must have a level, a signal, and a trigger. So without all three, we do not consider the trade setup to be a high probability trade. More than likely, we don't even take that trade. We need all three things to take that trade. So a trade with just a level and a signal cannot be defined as a high probability trading signal based on our techniques, and we probably wouldn't even be taking that trade. And if you did, I'd probably be asking you, what did you take that trade for? All right, so one thing is the levels. We're going to talk about the levels. If you don't know where to trade, then how could you call the trade high probability? So you should always know where your trade entry is long before price reaches that location. So some trade levels can include, but they're not limited to, the following: horizontal support and resistance levels, fractals, trend lines. I said fractals before and I said it again. Pivot points, Fibonacci retracement levels, moving averages, Ichimoku levels, the Tenkan-sen, Kijin-sen, Kumo, and our strategy today is going to be based on using the Tenkan-sen from the Ichimoku system. All right, and another thing that we really use a lot of is fractals, guys. Fractals are super, super important. So you're going to hear me talking about fractals. You're going to see me marking fractals, and we have trade setups based off of fractals. But tonight we're not going to be showing those setups based off of the fractals. We're going to be showing Ichimoku, because mostly everyone thinks that, they see me trading Ichimoku all the time. They don't realize that I can't trade Ichimoku all the time because the market environment is constantly changing. So if the market's changing, I need to be changing too. So I need to be able to trade a market without Ichimoku, because Ichimoku is for a trending market. It's not for a ranging market. So therefore, if you're using it during a range, you're probably losing a lot of your trades, okay? So I have to be able to have more than one weapon. So therefore I use mostly price action, guys. My trading style is price action, fractals, support, and resistance, and that's it basically. And then when you throw an Ichimoku on there, that's going to be it. But those, I can trade the markets all day long with just fractals, horizontal support and resistance, and price action. I don't need anything else to trade the markets. But most people see me trading with Ichimoku, so they don't realize that I'm able to trade without Ichimoku. So we need to do a quick basic understanding of Ichimoku so that you can understand the strategy when we start talking about it. All right. So the Kumo cloud, which is the shaded in area of the system, which is the blue and then the goldish here, it's going to be shaded in area, and it's going to be represent your future, and it's going to represent support and resistance levels, and it's going to represent strength of the trend and everything to that nature. So it's going to be shifted 26 periods ahead. All right, so we're going to look at that as a support level or a resistance level, and then it's also going to tell you some other things. It's going to tell you how that market is moving, and it's going to tell you about volatility. And then here's what we're going to be using mostly as the Tenkan-sen or conversion line, as some say. I call everything what it really is. I don't have the second nature name such as conversion line. So the Tenkan-sen is a 9-period high and 9-period low divided by 2, and that's where you get that green line here. That's the Tenkan-sen. So we're going to be focused on that tonight. And then you got your Kijun-sen. It's going to be a little bit part of the strategy. And the Kijun-sen or baseline is a 26-period high and a 26-period low divided by 2. So the Tenkan-sen is your 9-period high and low divided by 2. Your Kijun-sen is your 26-period high and low divided by 2. Pretty much basically moving averages, but a little bit different. All right. So we're going to be talking about that. And then finally, you got your Chikou span or lagging line. So Chikou span is going to be always 26 periods behind price. So wherever price is, it'll be at that exact level. If price is here, here, or here, Chikou span will be back behind it, but 26 candles behind it. So that's all that is. That's all it's going to be. And basically, it shows you and lets you know that if price is moving, if you're, ranging, because if you're ranging, you're going to stay within the candles of 26 periods ago. So if I'm over here and 26 periods back, there's a whole bunch of candles here, and Chikou span is inside those candles. Well, I never really moved higher or lower. I just stayed in that area. So that kind of helps you to let you know. And then once the market is moving, you can see there's nothing above Chikou span and everything's below it. So you know that you've been in a trend. You're in a trend. So then we're going to add a probability booster to our trade setup. This probability booster is going to be divergence, okay? And this is something that I love to use on support and resistance levels, especially horizontal support and resistance levels when I reach a double top or a double bottom, and I get that divergence to give me a signal that, yeah, this trend is weakening, the market's not as strong as it should be to break that level. Now, that doesn't mean it's going to work all the time, but it helps you to increase the probability of your trade. So divergence is defined as separating, changing into something different, or having a difference of opinion, or not being in agreement. So when we look at divergence in trading, we're looking for price and the oscillator to not be in agreement with each other. So this disagreement occurs when price goes one way and the oscillator goes the other way. This divergence or disagreement can be a very powerful tool to use in your trading plan when used properly, because divergence reflects that the underlying momentum of the market may be weakening and may be approaching a reversal point. This reversal point is usually a level of support and resistance. For us, it will always be a level of support and resistance. Therefore, if we're not at a support and resistance level, then divergence has no meaning to me. All right. So there are two types of divergence, known as regular divergence and hidden divergence. And we're going to be focused on the hidden divergence. It's the one that's hardest to see sometimes. So here's the types of divergence. As you can see, the bullish divergence, it occurs in a downtrend when price is making lower lows or the same level lows, and when the oscillator is making higher lows. This shows that the trend is weakening and there's a possible reversal. Then we have bearish divergence, which occurs in an uptrend when price is making higher highs or the same level highs while the oscillator is making lower highs. This shows trend weakness and possible reversal. All right. So we don't want to see the trend weakness or possible reversal. We want to see the trend continuation. So if we want to see that, we're going to start looking for the hidden bullish divergence. A lot of times people are always looking for where is it going to reverse, where we're going to try to take the reversal. Well, how come we don't trade where the strength is? We're going to trade with the trend. So if we want to do that, we have to find out how to get back into the market. As I said before, we had levels where we want to get into the market. So if you just jump into the market, then you may find yourself going with the trend, but going in the direction of a pullback, which probably takes up all of your stop loss, and then the market goes your way, and you wonder why, because you didn't have a level to get into the market. If you don't have a level to get into the market and you're just jumping in anywhere just because you're going with the trend, that still is not the way to go. So the hidden bullish divergence occurs in an uptrend when price is making a higher low or same level low. So while the oscillator is making a lower low, so that means basically what I just said there is price is making higher lows or same level lows. So we use fractals, so it's going to make higher bear fractals while the oscillator makes lower lows. So this shows that the trend strength and possible, this shows trend strength and possible trend continuation. So then the hidden bearish divergence is going to occur in a downtrend when price is making a lower high or same level high, and in our case it's going to be a lower bull fractal, all right, while the oscillator is making a higher high. This shows trend strength and possible trend continuation. So I got a divergence cheat sheet because a lot of people don't remember this stuff. It's hard to remember sometime if you don't use it a lot. So you may want to look at this cheat sheet, write it down, write this stuff down. And what we're going to be concerned with are the bottom two here, hidden bullish and hidden bearish, all right? Because we want to go with the trend. As you can see, the results are price continues higher, all right? Price continues lower, so that's trend continuation. When we're bouncing off of a double high, a double top or a double low, a double bottom, sometimes you want to look at regular bullish or bearish divergence, but you can also still look at hidden divergence, and I can show you how to do that. All right, so let's look at what we're going to be looking for here. All right, so regular bullish divergence is as price is trending down, the oscillator is trending up. This is not what we want to use. You could see price trending down, the oscillator is trending up. The oscillator's lows are moving higher. The price lows are still moving to the downside. That's not what we want. So what we're looking for is this. As you can see, we're using Ichimoku here. So when we look at this, this is going to be a Tenkan-sen bounce trade that we're going to be looking for in this divergence setup. But basically the trade is a Tenkan-sen bounce, and sometime price gets in between your TK zone, which is your green line here, which is going to be your Tenkan-sen, and then the blue line here is your Kijun-sen, so that's your TK zone in between there. So when price is in a nice trend, it loves to follow the Tenkan-sen when it's in a strong trend, and when the direction changes, it usually violates Tenkan-sen and Kijun-sen, all right, and then it goes to the other side. Now what you get is you get a TK crossover right here that is bullish, which means the Tenkan-sen is above the Kijun-sen. That's bullish, and you want to be going with that direction. And then you can see you got a crossover here that was bearish. So now you want to be trading with that direction. So you want to basically try to be following the direction of your TK crossover. All right. So when we're looking at that, the market moves and it moves, and then we're looking for a place to get into the market. Well, we know there's a couple levels that we look at. So we're going to be looking at fractal levels, support and resistance levels, and then we're going to look at the Ichimoku levels if we have Ichimoku on our chart. We'll be looking at this Tenkan-sen bounce. Tenkan-sen bounce. So every time, how do we know that this bounce is going to be good? All right, so sometimes we just use price action. We don't use any divergence, and we just use the level, look for a setup, and then we enter the market based off of that. But to get a higher probability trade, we're going to use the probability booster, which will be our divergence. So you could see this level right here. See this bearish fractal, and then there's another bear fractal right here. All right, price moved higher, and we had to wait to get into a trade down here, but we had to look for the level to get into the trade. So price bounced on this level right here, which was my Tenkan-sen, but basically it bounced on the cloud. So as I told you, there's levels of support and resistance. With Ichimoku, it's going to be your cloud, your Tenkan-sen, your Kijun-sen. So you can bounce on any of those levels, but when you're in a good, strong trend, you're usually going to bounce on Tenkan-sen. So price doesn't usually come much farther inside of Tenkan-sen and Kijun-sen when you're in a good trend. So what you see here is the market making, the price making higher bear fractals. So there's a bear fractal to the next bear fractal. And those who don't use fractals, you use swing lows, okay? All right, and then this is the oscillator is making lower. As you see from this point, it's going lower. So if it's going lower, that's disagreement, which is divergence, and this is the hidden divergence. So when it's going lower, that means that basically this is false momentum the oscillator is showing you, and there's still strength for the market to continue to the upside. So what we look here, we look for three things now. So first we get our level. There's our level. Price came down to our level. Now we're looking to get into a trade because we're thinking continuation, right? And we have all kinds of ways to know and think that the market's moving to the upside. But one of them, as I just told you, was the TK crossover, which is bullish. Price went above the cloud. And then I could look at fractals, and breaking bull fractals or whatever. But then price pulls back to this level here. This is where we want to get into the market. When price broke this level and was way up here, we already knew where we wanted to trade. We already knew we wanted to look for a bounce on Tenkan-sen or a bounce on Kijun-sen down here or a bounce on the cloud. Therefore, we got inside this zone here. So now we have our level. So now we need a signal. A signal is going to be a price action signal. All right. So that's going to be either the way we do it is we look for rejection, indecision, or box in. So we'll box the market in and we'll play inside out trading. So I'm not going to go through all those things right now, but those are the things that we look for. And then we look for a trigger. So it could be a violation of a level, a violation of the indecision, or the inside out trade. Once the market moves outside of the inside out level, then you take the trade. We're already getting this signal telling us that there's divergence here, which means there's strong momentum still to the upside, all right? So therefore, we would take that trade right here because the oscillator made a lower low while the Ichimoku system here, not Ichimoku, but the price made a higher low with the bear fractals. So that's really big, and then we would get into our setup there. All right, so it's hard to take questions while I'm doing the doing this, so I will take them when I'm going to the live charts more than likely. But if you do have a question, just ask me and I'll try to answer it as I go through this. So when price breaks through the cloud, yes, I wait for a pullback. I mean, there's so many different ways of trading. So you could either take the trade, and which would be a Kumo breakout, right? But if you look at the chart, sometimes Kumo breakouts, you get this crossover right here, and price is getting too far away from the Kumo, from the Kijun-sen. And when it gets too far, you know there's a pullback in store. So I don't want to be jumping in a trade up here somewhere and then have to wait for the market to pull all the way back and take me into the negative and then wait for me to go back, because this is how a lot of traders lose anyway, because yeah, they're going the proper direction, but they got in the market at the wrong place. That's why we have levels where we want to get into the market. So therefore, you don't want to just jump into the market anywhere. You want to know your levels. Okay, so if you took this breakout here, you probably would have been all right with the Kumo breakout. But basically, yeah, I want to always look for that pullback to one of my levels all the time. I always trade a level. All right. And I let price take me to that level, and you have to be patient, because trading this way is going to help you to develop your patience. It's going to help you to develop your discipline. You have to have rules. So if you have that, that's going to help you. A lot of traders don't have the discipline or the patience nor the rules to even be successful. All right, so here we go again. We're going to look at some more bullish divergence and look at how many times we could have jumped into the market here. Now, yes, it's hard. It's easy to say, well, this is after the fact, but guys, I do this in the fact, and a lot of my members will tell you I do this in the fact, and I show this when I'm really setting it up, because I'll send it out to members and show them setups and let them see what I'm thinking even before the trade is set up or triggered. And I always show them where the level is that I'm going to get into the trade. I don't give exact numbers like, okay, this is where we're getting in, 100790. I give them where I'm going to get in based off of price action and based off of highs and lows and things to that nature. And I can tell them where I'll be entering the market, but I'm not going to give an exact number. And you would understand if you saw how I do the trade setups. And we don't call them trade alerts. We call it more trade setups because basically you learn how to trade these setups, and then when you see me making a setup like that, you understand exactly what I'm doing, and you understand how to take that trade yourself instead of counting on me say, well, take the trade at 100,790 with a stop loss at 100,550, and then take your profit at 101,510. No, that's no good. I mean, what are you learning from that? If you want that, you just go to a signal service, basically, right? So you don't get anything from that. You can't trade your own account because you don't even really know what you're doing. All right, you're just taking trades based off of somebody telling you some numbers and you're trusting that person. I don't want my members to trust me to tell them to get into a trade. I want them to trust that when I show them a trade, that they can look back on it and say, yeah, this is what I want to do. He's right with this, and this is the way I want to do it. All right, so that's why I don't do trade alerts and give numbers and just tell you to get in here and do that. But when you look at this, so if I'm showing you this setup here and I teach you this setup, and then I see a setup coming and developing, and I post it in the forum and then send it out to the members, then when members see it, they know exactly where I'm getting in because I already show I'm trading inside out, or I show I'm trading a high or a low or whatever. All right, and they know where that high is, they know where the low is, they know where the inside out level is, and they know where to enter the market. All right, so this is again showing hidden bullish divergence. As you see, we're using fractals, so we keep the fractals on our chart. But guys, if you don't, again, you don't use fractals, you use the swing low, you'll be pretty much in the same area. So this bear fractal here is higher than this fractal here is higher than this fractal. So that means the market was moving higher. And here you could see that the oscillator was moving lower. That's hidden bullish divergence. That means the trend is going to continue more than likely. So that gives us higher probability. So now what do we do? We look for that level. That happened right at a level of interest for us. That's going to be the Kijinsen right here. It bounced on the Kijinsen. We could have played this inside out. So if I tell my members we're looking at the Kijinsen bounce with bullish divergence, we're playing inside out, and then they know exactly where to take this trade. All right, but there's so many different ways to enter a market. Once you find your level, you use your price action, and then you can enter the market, and you can see this trade could have went on for you. And if you missed this one, right, so then you could have went to this one here, because here you had another low fractal, then you had a higher fractal, and actually this one, this is not the same. I'm sorry, this is it right here. This is where we're going to look at the market moving, and we're going to enter here. So the market moved higher here, and we had bullish divergence right here, hidden bullish divergence. As you can see, from this point to this point, this oscillator was going lower. How come the market wasn't going lower? Now you could see you would have had a good trade. All right, but you could see there's regular divergence in this market also. There's regular bearish divergence. Sorry guys, I'm going to show you right now. So you could see the market moving higher, but really from that point, see this point right here in this area? Look what this is doing. So I like to use this divergence, this regular divergence, if I had a double top here, had another candle, and we had some strong resistance here, I would definitely use this to get me into a trade to the downside. All right. So I wouldn't use the same divergence. I wouldn't use the hidden bullish divergence, but again, there is a way that I could do that. All right, so that's what we're looking at with that. Let me move. Do I have any questions really quickly? And I'm slow with this, so when you hear me ask, are there any questions, and then I don't say anything for a minute, it's because I'm looking at the questions. Okay, so we're going to continue moving. So here again, what I'm using, guys, also is, I want you to understand, I'm using, we'll go back. Here I had it different. I'm using the RSI, the 533 RSI. I mean, sorry, the stochastics, the 5, 3, and the 3. But what I'm doing with that, I took off the signal line and I just have the regular line here. So I took the signal off. So you don't see the red crossovers and this and that, because I'm not trading stochastics, and I'm not trading stochastic crosses and stochastic levels. I'm trading divergence. So I use a couple different things for divergence. You could use RSI, you could use the ultimate oscillator, but for what we're doing here with hidden bullish divergence, I believe stochastics works the best. All right, because look at here now. I was on here, I had the signal line here, and I wanted to take it off so people don't get caught up in these crossovers here, because we're not trading that. That's a bunch of malarkey. We don't want to trade that, all right? So what we're looking at, when I took that off, you could just understand what the market is doing. So you could see here we had a fractal, a low fractal, and look how many times price follows Tinkinson and then pulls back inside your zone and continues higher. Well, we want to be catching some of these trades, and sometimes when we look at that hidden bullish divergence for continuation, we could catch that. So the market was moving nice here, and we didn't know where to get in. A lot of people don't know where to get in. So where are you going to get in here? I mean, do you get in here and then the market drops way down on you and you lose, and then the market starts going to the upside, and you always wonder, why does it keep going up after it takes me out? It's because you're not entering in the right spot. All right, that's why you got to have a level where you enter the market. So here we see bearish hidden bullish divergence. All right, as you see the oscillator going to the downside, and then you can see this bear fractal here and a bear fractal here. They're higher bear fractals. All right, and I'm not going to get into the fractal thing because I don't want to go into explaining why these are bear fractals and why these are bull fractals and to that nature. You could catch that in my courses. I talk all about the fractals, and fractals are a major part of our trading. But anyway, you could see the price came back inside the TK zone and bounced right on Kijinsen. It couldn't violate Kijinsen, and it had a rejection right here. Never violated it, and then went to the upside. Well, we want to be able to catch that, right? So you could see what we're using here. We're using this hidden divergence along with our level. We got our signal and then our trigger. We got all three things here to take the trade to the upside, and then price continues to the upside here. Now, as far as getting out of the trade, all I do, guys, is usually use support and resistance levels. I'll look to my left and find support and resistance, and I'll use those levels to get out of the market, or else I use a 1-to-1 ratio. I'm not going to go deeper into that until we get to the live charts. I'll show you some of that a little bit. All right, so here again, this wasn't major right here, but you could see. Let's see. So you asked me removing the red or green line. Just remove the signal line. It doesn't really matter what color I mean, this could be blue. It could be orange. It doesn't matter what color your stochastics line is, right? You can make it whatever you want it to be. So I got a couple questions. Let me try to answer them real quick. So you're asking me to include the day trading techniques also. The techniques I'm telling you, you could do on any time frame, but naturally I use the 4 and the daily, and when you start going lower, then techniques start becoming less reliable. All right, so the higher time frames are more reliable, but you got to wait a little bit longer to get them, but you probably get a better move. All right, yes, I'm using the 5-3-3 settings on the stochastics. So how to know about the pullback? Basically, you know where the level is. The level is what you're trading. It could be the things that I mentioned, which would be your Tinkinson, your Kijinsen, your cloud. It could be a horizontal support and resistance levels. It could be a pivot point level. It all depends what you're trading. It could be Fibonacci retracements. It could be all of that stuff. All right, but you're not going to have all that on your chart. You got to choose which is best for you, which works for you. And for us, what works for us is basically Tinkinson and fractals. Fractals are going to be major for our trading. There's probably the best trades that we get. And then Tinkinson, these Tinkinson pullbacks are probably the second best trades that I get. All right. Okay, thank you. So I'm going to move on. So here we see a bear fractal, and then we have a higher bear fractal. But we could see, we'll call this the bear point of the oscillator, and then a lower bear point. So this swing was lower. This swing here was higher, and this point was lower. So what's it doing? It's trending to the downside while price is trending to the upside. And even if price is staying the same level, I will call that still divergence, okay? If price had stayed at this level and the oscillator was going to the downside, that's still a strong sign for you. That's because this level here would be support, right? Well, how come price cannot violate that level, but the oscillator is showing that a violation should occur? but it doesn't. Then you get that price setup. But here it was making higher lows again, which was higher bear fractals. And then we found our level. We got our level. Once price left this point, we're looking for a trade. So we probably start looking in this area because we bounced here. All right. So yeah, we probably would have taken some trades in here without the divergence, because we don't just trade divergence here. But divergence is like basically the booster for us. It's going to be the probability booster. So let me get some of that junk off the chart so you can see what I'm talking about. So yes, we would have been looking at this bounce because we're always looking for bounces on Tinkinson to trade. All right, and then we had a nice good setup in here, and then the market moved a little higher, but it wasn't a great trade for us. But then we get divergence trade now. We got a divergence trade. All right, and I can't draw, guys. I'm a little bit like, there we go. So I'm not drawing a straight line here. So let's see that to the downside, right? So now we get a better opportunity in here. Then we got a nice signal and trigger, and look where the market goes. All right. All right. See if I got a couple questions again. Is there a good way to recognize non-trending markets? Lots of fractals, right? Yes, lots of fractals. That will tell you there's a non-trending market. A lot of times the market's barely trending. So it ranges most of the time. So a lot of times you'll be looking for that trend, and you think it's going to trend, and it's really back into a range, and you start losing out. All right. But yeah, I mean, I talk about that more in some of the courses that we have out, talk about trying to catch the trend or the range, or the way that you're going to trade. So therefore, like we were talking about earlier, you want to make sure that when you're in a range, you're not using Ichimoku, because basically it's not going to really help you. All right. So that's like I told you, I can't trade Ichimoku 24/7 because I'll be a loser all the time then. All right. All right, guys. So we'll move on, continue. So let's move through this bullish divergence so we could look at some bearish divergence, and then we'll look at some charts because maybe we could see some current things developing. I like to try to show you guys what's really happening so that you don't say, oh, that's all hindsight. Anybody could do that. Well, yeah, anybody could do that. But like I said, I do it for real too. So here's again, you could see this fractal's way down here. Even if it was right here, look where this fractal, look what the market's doing basically. And what's it bouncing on? That green line there. It never violated it, right? And then it stayed above that line. We have the crossover down here where the green line came above the blue. And then we have this fractal here, which was the low right here. All right, even if we said the low was right here, okay? So here we're showing the low. I just marked it with the fractal, but if we look at the point, and then we look at the point down here, based to in line with this and this, you can see it's trending to the upside. This is trending to the downside. They're in this disagreement. We have a beautiful setup in here. Then the market goes our way. All right. Again, we got another hidden bullish divergence. Now, as I said, remember I said that it can be the same level. The market barely was moving here. You got the same level. Look where this fractal is, and look where this one is, the same level. All right. And then we had a nice setup here. And then we had looked at divergence, and you could see this was way down here. At this point, you already was kind of pretty sure what was going on here. You could see that divergence. Now, you probably were thinking that the market was going to violate, but look at the little candles here. You know, it start making a little bit of indecision, little small candles. It never violated our Kijinsen, because that's going to be basically your real trend line for the overall bias. The market's going to stay below that, above that level, or below it, depending on which way it's going. And then it likes to make bounces off of Tinkinson and then come inside the zone sometime. So when we know all these things, then we know what to look for, right? All right. So what we started looking for was basically, we didn't violate that fractal there. That was big. And when that was big, we also had a support level here. Being that we didn't violate this level, we start looking at price action. So we had our level already. And then we had a signal and a trigger, and we wanted to look at what the market was doing as far as disagreement with the oscillator, and it was, and therefore you take the trade. All right. So we'll look at the next things. We're going to go to hidden bullish divergence, and then we'll get on to these charts. We're going to go to hidden bearish divergence after this. Again, another bounce. You can see the bounce. You want to make sure you guys understand this and can see this stuff before I just move on, because I'm trying to make sure that you guys understand this, because you won't be able to ask me later. Because here it is. The market moves to the upside. The oscillator is moving to the downside. You can see how it's moving to the downside. And you look for your bounce off of your level. You're inside your zone here, right? You're inside your TK zone. And then you have a bounce off of the Kijins, and price never violated that level really. And then you got to set up, trigger, boom, the market goes your way. All right. All right. So again, another hidden bullish. You can see what it's doing. All right. So I'm not going to explain that a lot. We want to get to the bearish now. All right. Because I'll be here all day. I want to be able to show you guys some things on the chart. So here we go. With the regular bearish divergence, this is not what we're looking for. As you can see, this is regular bearish divergence, and this is used well, again, as I said, if you were looking for the market to bounce off of a level, all right, a double top or a double bottom. Look at this, to the downside. The market's still going to the upside. Eventually, it's going to lose power. It's going to lose that strength. It's going to lose that momentum and drop to the downside, and it did. But we're not looking for that one. We want to see the trend continuing, right? So if we want to see the trend continuing to the downside, well now, and the easy way to remember this, guys, because you're going to probably get confused a lot. If the market's moving to the upside, let's go back one. If the market's looking to moving to the upside, you want to always think about a trend line. So that would be your Tenkan-sen. If you're not trading with Ichimoku, you could have a trend line or think about a trend line, right? So every time that trend line is touched, you want to worry about the bottoms. When you're trading to the upside and you draw a trend line, you draw it on the bottom, right? So now that's what you're going to be concerned about when you think about divergence. You're going to be concerned about the market bottoms, the fractal bottoms, the bear fractals, and you're going to be concerned about the oscillator bottoms, the oscillator low bottoms, the oscillator bottoms, the oscillator bottoms, the oscillator bottoms. All right, did I drive that home? So that way you won't get confused. So you're going to be looking for bounces because you want to trade to the upside. So therefore, when they're not in agreement and the market's moving higher and they are not in agreement, that's what you're looking for. All right, so now if you're thinking about the market in a downtrend, you're going to think opposite, right? So how would you draw your trend line? All right, so in a market that's moving to the downside, you're going to draw your trend line above price, right? So your trend line would be like this. So now you're going to be concerned about the fractal tops or the swing highs or the points that are hitting the trend line, either or. All right, and then you're going to be concerned about the tops of the oscillator. No longer are we worried about the bottoms. All right, we're not worried about that anymore. We're worried about these tops of price and the tops of the oscillator. We want them to be talking the same language. Well, actually, we want them to be talking different language. Therefore, we know we could get into the trade. All right. So I got a couple questions. Let me answer them real quick. So you're saying sometime candle closes below Kijin-sen, but next candle goes up. Well, then you don't have to take every trade, right? If you don't understand what the market's doing, don't take a trade. All right, wait till you can understand what the market's really doing if it shows you. But basically use your price action. That's what's going to help you to understand. If you have a level and you have price action, you got the two things you need, then you get that trigger. All right, but if you don't understand at that point, there's no need to have to take a trade. You don't have to take a trade, right? We have to take a good trade. So now on this, the hidden bearish divergence, we're looking to trade to the downside. So you could see price again On the downtrend, it follows this green Tenkan-sen and never violates our real trend line here, which is the Kijun-sen. All right, so price comes inside our zone here, and there's a lot of trades here we could get off without looking at divergence, but sometime we'll look at and see there's divergence, which gives us even stronger odds of winning this trade. So here we look, you could see, here's the bull fractal, and we made a lower bull fractal as price was trending to the downside. Price found a resistance level. So we had our level, right? So we had a level. So the first thing we really need is a level. So let me back it up here. When price was down here, moving down here, we already were thinking, where are we thinking to trade? We're not thinking about counter trend trading. We're thinking about trading this trend. So where's our level? Well, first level we're thinking about is catching a trade here. Well, the market violated that point. Well, then we're going to think about catching a trade here. All right. If the market violates, we're going to think about this. But if the market violates this point, that kind of means the direction of the market is changing, right? Okay. And then also there's something else that really tells us the direction of the market is changing. We violate these fractals and then the market does change direction. All right. So let's go back to what we're trying to show. We want to know where the market is right here. We're looking for the trade already to the downside, and we already have our level up here. So we're not looking to trade here. We just know where our level is. The market gets to our level, we don't get the trade because the market blew right through our level a little bit. Then the market got to our next level inside our TK zone here. When the market was inside here, we saw some indecision. Nice indecision candle. All right, we have a level. We have a signal. And then we had a trigger. And then we had a probability booster with the bearish divergence. Could you see this top here? Where this top was, this is going to the downside. This went to the upside. False strength to the upside. And the market goes to the downside. Good trade here. This would have been a great trade for you. And this is all daily time frame right here. All right. You could I love to trade the 4-hour time frame, but this is all daily time frame pretty much. All right, so here again we see the same thing. You can see I have it drawn in, and here I had this stochastics with the signal line in here too, but I like to take it out because I don't want people focusing on these crosses because that's not what we're trading. All right, and those crosses look real good during when I have it like this, and you can look at it and say, well, those crosses look good. Take those crosses. It's not that easy. It looks good behind time, but when it comes to real time, it's not. But when we look at the market and we use price action, that's what's happening at the real time. All we're using is our levels to get to, and then we're using something to show us that the market's weakening, but we're entering the market on price action. We're not entering the market on an indicator or anything of that nature. We're not entering the market because Ichimoku tells us all signals are bearish. That's just our bias. That's not an entry signal. That's just a bias. So here we have a downtrend, and you can see making lower bull fractals, and the oscillator made higher highs right here. The market, when the market was right here, we were already thinking, where are we going to get in this range and this trend when it pulls back? Well, when it got here, we start thinking, well, if it pulls back, we're looking to get in here. And it got right to that level, and it showed divergence. All right, bearish divergence, hidden bearish divergence. It gave us a signal and a trigger, and we entered the market. All right, now depending on where you put your stop loss, because we want to put our stop loss at this Kijun-sen, some people are going to put it above the indecision, and it'll get stopped out right here because the market spiked up a little bit, but the market never really went higher than our zone, which you have to really understand, and then the market broke to the downside. Good trade for you. All right, here it is again, but now this one I want to show you something really different, because we're following Tenkan-sen here. You can see how we followed it. Then we got inside our zone here. All along, we're always looking for a chance to get in the market here, but you still guys have to do one thing. I think that you have to always draw your support and resistance levels on your chart, because when you have a look at your charts, basically look to the left. If you see a bounce off of a level and it's a double bottom, double top, triple bottom, whatever, and it's a bunch of support down here, so we had a support level here. Well, I had a trade set up here because I had that divergence, as I told you. We had hidden bearish divergence. We had the market pull back to our level, all right, and then we had a signal, a trigger, and then we would get into the trade. But this trade, we have to be careful, because how far is this trade going to go? it's only going to go to this support and resistance level probably. And therefore you want to know those levels on your chart, because that way this trade wouldn't have went that far before we would have had to look to get out. But it still yielded us a good trade based off of our trading rules, based off of the divergence. I'm trying to draw this line for you and show you. You could see that going to the downside. You can see that going to the upside. This is the support level here. Well, if I get into the trade in here, I don't have much room, so I got to know that. If I don't know that, then maybe I think I'm good to go. Or even if I suppose I got into the market way down here, that's where it took, where my signal was, and I only had this much room to trade, and I didn't know that. And then the market bounced and pulled back and took me out because I was expecting it to go farther, because I didn't know I'm trading into a support level. You need to know you're trading into a support level. That's why you need to draw your daily support and resistance levels on your charts. And draw the relevant ones. I mean, if you're coming down to a level, it's really relevant to know that. All right. So I'm going to move on, then I'll look at some questions before I go to the live charts here. Again, this is another thing. You could use this also for Kumo breakouts. All right. But I'm not going to get deep into that. I'll show you some on the live charts if I can. But basically, again, now we had to wait for a trade, right? Because the impatient trader wants to catch all this, and they can't wait. You know, they can't wait to get in this. Somewhere they're going to get in here. All right. So they're just going to jump in. And yeah, you might have won. You might have get some winners, but you're not really using a good strategy, because the market could pull back on you anytime. You don't know where that pullback is going to occur. So you don't just jump in the market. You got to have a level that you want to get into. We already had a level. This was our level, but then this was another level, the bottom right here. See that flat bottom? That's resistance right now. When the market violated it and then pulled back up to it, that was the good level to get into. Or else you could get in at your Kijinsen. It didn't pull back to the Kijinsen. It pulled back to this flat bottom right here. When it pulled back to that flat bottom, we could see there was hidden bearish divergence, because look at this high here and look at that high there going to the downside. We had our signal, we had our level, we had our signal, and we had a trigger, and we're into the trade. Boom. So another good opportunity there. All right, here it is again. Now this market was kind of flat right here. You see that? And then we get this violation here. So we're going to think that the market's continuing. Everybody wants to catch this. Yes, I know you want to catch that. Sometime you're not going to catch it, but if you're a breakout trader, you probably take that chance and get it. Breakout trades don't work most of the time. So you lose a lot of what you're trading, and then you get one good breakout to catch back up, and then you lose it all again on other breakouts, and then you try to get it back again. But here you're waiting for a level where you're going to wait for. So yes, we don't catch all this, but yeah, we do have trading styles that will catch this. There is a trade that's set up right here to catch this. All right. And there's a couple trades you could catch this on. All right. But this trade here that we're talking about, we're looking for the pullback. We pull back to the Tenkan-sen and Kijinsen level here. We had a beautiful setup right here, and then we had a trigger, and then the market dropped right to the support level, because we know where the support and resistance level is. And I'm going to show you on the live charts how I look at my targets. All right. It's going to be all support and resistance level. So you could see it was trending up, while this had a monster trend to the downside, and it hit monster support. Look how flat that Kijinsen is. All right. And then we had a big signal and trigger in here, and then the market was going to the downside. We got our trade. All right. All right. So now talking about a Kumo breakout, right? So when I'm looking at this, the market's moving to the downside. Look at these fractals. Now this was probably news right here. So that fractal, I do count it, but I'm not going to mark it as the high point, because it was a big news thing. And the market pulled back. We don't trade news. Basically what we do when news is coming, I always tell traders when we go through our charts and everything, we make sure that there's no news for our pair that day. And then if there is, we don't trade that pair. But you can see the market moving to the downside. And then when it hit this level again and broke out here, we could see that there was hidden bearish divergence. We didn't even have to catch the signal or the trigger. We could have caught the Kumo breakout, all right, because the divergence set it up for you. So that's just another aspect of this. There's so many things that you could look at. All right, so here it is again. This is different. Now this is hidden bearish divergence, but look at this. This is flat at the top right here. Now remember I told you that either it's going to be flat or lower. It's going to be to the same level or lower. We don't want it to be above because then it would be in agreement with the oscillator. The oscillator made higher highs. The price didn't, all right? And then price gave you a monster signal. Now this is, you would have to trade this without Ichimoku. You wouldn't have Ichimoku on your chart. I shouldn't have put it on here for you. Let me go back because that live says we're getting ready to go to the charts. But I shouldn't have put this on here because I wanted to show you without Ichimoku we could catch these resistance trades and support trades on the bottom using hidden bearish divergence, because basically the oscillator is saying we should be violating that point. Well, the market's not violating that point. It's staying at the same level, right at the resistance, and then it drops like a rocket to the downside. All right, we had major setups in here. All right, so we had major setup, major signal, and boom, the market was down to the downside. All right. So this is it. This is what I'm getting ready to do. Take you to the charts, look at some of that stuff for real. And then I'll show you the website inside the website real quick, and then I'll get you out of here. I know y'all got to get up for work tomorrow or whatever, and some of you, your parents are probably calling you, so I'll get you out of here. Don't want you to get in trouble, get put on punishment. All right, so we're going to go right to the charts. I'm slow, guys, so just hang in here with me. I'm getting my charts. All right, I got my charts. And I got some charts that I want to look at. There's not trades on a lot of things right at the moment. So here's the live charts. Now, I guess y'all know about FX at one glance. I mean, FXC, I'm sorry. They had some issues and they're no longer with us. All right, and they made us get rid of our accounts and send us over to forex.com. So I never really have been trading much with MT4 because I don't really like it that much. I mean, I used to trade with it in the beginning of my days, but since then I've been using their platform because it's like one of the best. And so now I'm getting used to MT4 again, so it's a little shaky for me. But I got some pairs that I want to look at, so I'm going to go to them really quickly, and then we'll take some questions. Let me take some questions before I even get started because I'll get so deep in everything. Never trade inside the cloud. Okay. I'm not going to respond on that right now. You thought when the oscillator going up and price making lower is hidden bullish divergence, but the top says hidden bearish. I'm kind of confused what you're asking me, but I got it. I showed you guys the chart, the cheat sheet, so you could use that. Okay, guys, so I'm going to move through some of these charts real quick. So we're going to look at, first we'll look at the Aussie New Zealand. All right, so I'm looking at this thing, right? And I'm not going to talk about the divergence here. I'm going to talk about what I talk about basically when I'm looking at the charts with my members throughout. All right, so basically here, and it is some divergence that I was looking at, but I'm also going to talk about what I see happening here basically, because when price gets so far away from Kijins in here, price likes to stall here. All right, it will either stall or pull back. All right, but if I try to use divergence here, then I'll probably be wrong here because the market's starting to try to go sideways. All right, so what I'm looking at here is basically I want to see if the market's gonna try to pull back into this level here or get back to inside of the closer to Kijinsen, because when the market gets closer to Kijinsen, that means the market's in equilibrium, and the market likes to be in equilibrium. So when I'm always looking at levels, I always look to my left to see where that market could go. So there's a flat top right there along with some fractals, and then also my Kijinsen. So if the market violates these fractals here, we're going to probably see it move to the downside here, and then we could look for the market pulling it to this level here. Now I could trade this level with a bounce and move to the upside. All right, so I don't have to take this counter trend trade because basically that's what that would be. Now you always want to look at the market in a big view, okay? Because if I don't look at the market in a big view, I'm going to just see this, right? And I think this is good. I don't know what's above me. I don't know what's happening. So if the market bounced here and it went higher, I wouldn't be prepared because there could be a resistance level here and I don't know about it. So you always want to first take that big bird's eye view. So zoom out, see what's over there, and then mark those levels. So I'm going to mark this support and resistance level because I need to know when I'm making my trade where that support and resistance level is. All right, and it looks like we hit it one time already, but you don't know that if you don't have it marked. So basically we hit that level and came back to this point. So we may be ranging here while Kijinsen tries to catch up. Now we know if we violate the fractal, then we're probably going to see more downwards movement to this point. So currently I don't see anything right here. I do see a nice bounce off of this level. We do have a level right here, and we have a setup right here. We don't have a trigger. So I would kind of wait on this. But if we violate, if we do get that trigger, we'll probably see the market move to this point, because we're starting to see some divergence in the market, some bearish divergence here, looking at the tops, because we're making lower highs here while we made a new high here. All right, so that's different divergence. So currently we're sideways a little bit. You could say we're stalling. We're kind of not really consolidating, but maybe pulling back or stalling at this level. We'll see what happens here. All right, so let's go to the Euro USD real quick. I want to go through these charts quick because I'm approaching my hour time. So I was looking at this pair here, and I'm not looking at this pair based off of any divergence or anything. I'm looking at it based off of just Ichimoku. So what I wanted to do is put my levels here. I want to know where I can go. So if I say I'm going to trade this to the downside, right? If I trade this to the downside, how do I know where to go? Well, I need to know a couple of areas. I look to my left to find those levels. First, I know I want to get through that level if I take a trade up here. All right, because this level is the previous low. You do have to violate that to continue to the downside, but the market likes to fall on support and resistance levels, so it could fall back to this point. So if we get into a trade up here, then we're probably going to look at the market moving to this point. Now, I'm going to be changing my broker because their daily candles don't close the same time as New York here. So we're already seeing a bounce on Tinkinson right here, right? All right, so we're seeing Tinkinson bounce, but we're not seeing any divergence with us, right? Because it's the same, it's making the same, moving to the downside while price moves to the downside. But that doesn't mean price isn't going to continue. That just means they're in agreement. All right, so we have a level here. Basically, I like to see this rejection at Tinkinson right here. We rejected Tinkinson and the cloud level here. So we should be looking to trade to the downside. Now the market's trying to pull back here. So I'll go down to my 4-hour time frame. And I like to take Ichimoku off after I already make my bias, because when I make my bias on the daily time frame, there's no need for me to put Ichimoku on the chart on the 4-hour time frame, because what's going to happen is you're going to start to get confused. All right, you're going to not understand why I'm taking that trade. So I'm going to remove it. So now when I go to the 4-hour time frame and I look at the market, now you may understand more what I do if I take a trade to the downside. When I have Ichimoku on here, it may make you say, well, that doesn't go with the daily time frame. When you look at the market, guys, look at the big picture of what this market's doing. All right, don't let the little moves take you out of a trade, because the little moves are these 4-hour moves that you have something like this, and that scares you out of your trade when you know all along it's going to the downside, because basically you're looking at a trade and you're saying, well, based off of the daily time frame, the market should move back to this level, and here it did already, so it may continue back to the upside. So I'm not really looking at anything right yet. If I look at Ichimoku, I already told you what my level was to trade to the downside. I want to get through this point and I want to get through this point. Now, I can box this area in here and wait for my close and then take the trade to the downside. All right. So these are some of the techniques that we use to get into the markets. Let's go to the pound Aussie really quick. All right. So again, now this is a little bit of divergence here. This is a little bit of hidden bearish divergence, right? And I wanted to show you this one because that's what I see here. So I'm going to draw a trend line here because see this high and that high, right? Well, see this high here? It's a little bit higher. Well, the market already dropped. You could see we had a little drop. But basically, we would think the market was going to the next support and resistance level. Do we know where it is? No, because we don't have it on our chart. So we want to mark it on our chart so that we know where the market may go to. All right, so we're going to put the first level in here, and that's where we're going to trade to. All right, and then we want to also mark this level because this is a level of support and resistance also. Now let me make sure this is a level. Yeah, it looks like this is a level right here. We bounced here and then came through. So you want to know that because, guys, if you take a trade right here, you're trading right into support. The market may bounce higher. So with this trade, we already missed the trade. It's been 2 days ago. All right, the trade set was here, and then we wanted to trade to this point at least and then see if we could violate that and get down to this point. So now I'm going to have to wait for the break of this level here to start to trade. All right, because I really don't want to trade in the support. Now, if the market does this for me, so if the market moves higher, gets back up into my zone, all right, then I could trade back to this level again. But currently, we already missed the opportunity right here. All right, and your trade already went to the downside. Now it looks like you're getting a little motion here, but don't let these little moves scare you out of the market. The market probably should continue down to this point. All right, so that's the we're looking at the pound Aussie there on the daily time frame. Let's go to the pound CAD. Pound CAD daily time frame. Again, this is another one I wanted to show you, and we kind of missed this one too, so we're going to do this without Ichimoku because everyone doesn't trade Ichimoku. So let's take it off the chart here, and I'm going to show you so when we look at this market, you could see already, you don't need anything to really tell you what's going on here. You could see what's happening right here, right? And basically, if I look at that, look at this point right here. And the trade is kind of late, but you could do this with trend lines all the time. Just do this. And then you could see this point here. We already kind of missed this trade because this was moving to the upside, right? That moved to the upside. This was moving to the downside from the point to the point. It went to the upside. There was divergence. We had a signal trigger and the market moved to the downside. Where were we going to trade to? You always have to look to your left. So first level we would trade to. We're looking to trade to. There's support right here. We need to get through that level first. So we would have traded from here just to there, right? And this starts to look like a triangle pattern developing. So the market's going to eventually break and give us something nice. But I want to see the market, the big picture, so I can understand what the market's doing. So I need to get a big view because there's more support and resistance that I can mark. So when I mark this level, I'm going to mark another level for in case my trade continues. All right, so I'm going to mark that level because you could see support there, support there. So if this is the way that I find my targets, to where I'm going to trade to. All right, and you could do this on every time frame, but basically the higher time frames are going to yield you a better support and resistance level. So when I do that, when I make this trade, I know I'm trading right into support. If I get through that level, I'm going to trade down to this point. Now, once I get to this point, I want to see where my next levels are, right? So you just follow your support and resistance levels to the left, and you trade to those levels. Now, the market's not always going to come to those levels, all right? But those are the best ways to find your targets, all right? So that's pound CAD. I'm going to go to pound Swiss franc. Really nothing on here I really wanted to talk about except not based on divergence. First of all, there's nothing on divergence I want to talk about with this. I just want to talk about a regular setup here. All right, so when I look at this, you could see the market's trending to the upside, right? But it kind of flattened out right here. Found some resistance right here. But we could still get back to that point, right? Because we're bouncing here. We got a TK crossover. Chikou span is inside this price here, but it could still move up to this level because we're kind of ranging. But you can see the triangle pattern here. We got a setup down here with the level. So we want to see if our setup holds, get our trigger, and then trade to this point. All right. So that's what we're going to be looking here. We're going to get off of this, bounce off of this level here. All right. We already got a setup. Now you could trade inside out right here, but then that's going to take you half of your profit right here. So we want to wait for this daily candle to close more than likely, and then that's where we'll find where our trigger level is going to be. All right, and that's going to be based on previous high that we violate, or it's going to be based on, it could be based on rejection, it could be based on indecision, or inside out, like I told you. All right, So that's what we're looking for here. If we look at this trade, we're going to look to trade back to this point here. Now we want to see what happens with this candle. So that's going to be very important to before we really know what the trade is going to set up for us. All right. So that's going to be the pound Swiss franc, New Zealand dollar CAD. Let's go to that real quick. So New Zealand dollar CAD, again, you could see this divergence here. That's what I wanted to show you back here. You could see the divergence here, and you could see where this, so that was hidden bearish divergence, and the market dropped to the downside. Currently, I wouldn't trade anything in here. So as we trade, we don't trade this kind of garbage here because the market's not really doing anything. It's giving me a green candle, couple red, couple green. It's not going anywhere. So a lot of times what we'll do is box, before we really want the market to move for us to give us a real good trade, we'll just box this whole market in. So basically we say, well, the market needs to go above this level and it needs to go below this level before we get interested. How will we catch the trade? Now we could take this and trade it to a lower time frame. Ichimoku is not going to help us here, right? So we want to take it off the chart. So when we take it off the chart, let's see what we got, because we could trade this as a range maybe. All right, so we got a slight range here, and I'm going to mark the top levels. I don't want to mark the highs. So you could see here that's support, that's resistance. You could see the support here. You could see this support over here as I go farther. All right, so you could see. So I'm going to go to the 4-hour time frame, and then maybe we could see better setup here. So I like to go to the 4-hour time frame to trade these. I figure out my bias, so I'm getting all my understanding on the daily. So once price was up here, I should have been already looking to trade this back to the level here, because I'm going to continue to trade price at support and resistance levels until it tells me otherwise, right? So what I'm going to be looking at is this. Every time price does this, and this is when you're talking about being in a range. When price does this, goes back to these levels, I'm going to keep thinking it's going to do this every time until it tells me it's not. Let the price tell you what it's going to do. So I'm going to think it's going to do that every single time. Now, eventually it's not, right? But most of the time, if it keeps doing that, I'm going to catch this trade. I'm going to catch this big trade right here that you could see, all right? The good setup and trigger level that we had here. We had a level here, we had a setup here, and we had a trigger right here, and we knew where our target was. We had a level up here, we had a setup right here, and then we had a trigger right there, and the market is moving to the downside. Now, I'm not going to trade in the middle of the range, all right? So I want to wait for the market to get back to my level, see if it gets back down here. When it gets here, then I'll make my mind up to trade to this point. And I'm going to look for the same kind of things here. Going to look for these kind of signals to get into the market. And I need triggers along with those signals. All right. So that's looking at, let me erase those. I have any questions real quick because I'm getting ready to end this shortly. So you're asking me about a C-clamp? No, that's not, I'm not looking at the C-clamp right now. Okay, so we'll look at C-clamp in our members area. Do I trade down to the hourly? No, I don't trade the hourly. I trade the 4-hour and the daily. What if your account's too small? Your account is never too small to make a trade. It just all depends on what kind of a trade you're going to be able to get into. You can't get into all kinds of trades sometime because sometimes your stop loss is going to be too big. So maybe, you know, it all depends how many lots you're using. If you're using more than one, then maybe you have to reduce your lots. But if you're using just one and it's going to take you more than 2 to 3% of your capital, then maybe you don't want to take that trade. There's going to be a bunch of trades, guys. There's more fish in the sea, so you don't want to go chasing trades. All right, patience is the first thing that traders need to learn, and discipline. Once you start learning that, you'll start to be successful. Yeah, I'll show them the forum in the chat room, Sid. Thank you for that. Okay, so I'm going to look at, let's see, we're looking here at the New Zealand dollar CAD. Let's see what the New Zealand dollar yen looks like. Okay, so this is a support and resistance level. You can see Ichimoku doesn't do us great justice here, guys. So I want people to understand that you can't always trade with Ichimoku because Ichimoku is made for a trending market. This is a ranging market. I'm going to take it off the table here. So now I see I'm at a support and resistance level. When I'm at a support level, guys, I want to look, I already have my level, so that's the first thing I have is a L. Now I want an S and a T. I don't have that yet. All right, I do have some little bit of indecision here, but I'm not looking for just that right there. I need a S and a T, which is going to be a signal and a trigger. So we already have a level. Now the signal could be a couple things. First of all, if we violate this level, then we're going to have to look to get into the trade a different way. But currently we're looking to bounce because the market bounced here, the market bounced here, it bounced here, it bounced all these levels here. Until the market tells you it's not going to bounce anymore, you continue to think that it's going to bounce and you trade it to the upside. Don't guess what the market's going to do. Don't say, well, I think it's going to break. Even if you see it break, make sure it's going to be a break because it could be a false break. All right, so don't trade what you think, trade what you know. And the only way you're going to know is for price to tell you. All right, so we're going to look for a bounce at this level. We already have a L. We're going to look for a S and a T. We don't currently have a signal. We have some indecision, and that's it. And then we'll look for a trigger. So that's going to be one to keep our eyes on and probably be able to get a good trade on this week. All right, and then where's our targets going to be? We always look to our left, right? So since this is a daily time frame, the market may not move to all of our levels. So I'm going to first mark my first level that I'm looking for the market to go to. I'm going to look at that, but I do know that the market has to get through that point. So mark that on your chart, and then we go to a 4-hour time frame to see if we could get into a trade, right? So we already looked at the daily bias. Now we could go to the 4-hour, and now we could try to get into the trade. And with this here, this is I wouldn't trade this right now because we had a signal that was violated, and then now we have some indecision. We need to see what this candle is going to do. All right, so we could box this in and then we could wait for the trade to the upside, or if price is going to violate this fractal, then we'll know that the market's going to continue to the downside. All right, so currently I'm going to wait here and just is going to wait for this setup, but it's a possibility to get this trade sometime this week. All right, so that is the New Zealand dollar yen. The CAD yen we'll look at, and then we'll look at one more pair. And this is what I do every day. We go through the markets, but we take more time here than we are taking here because I can't spend all day with you guys here. And we get into more in depth with it because we understand what we're looking for here. All right. So we had a crossover here. This is in a downtrend, basically starting to slot, almost like a triangle pattern. You could draw it on your chart. You could see how that's going to the downside. Now I'm going to show you there were a couple really good opportunities here using divergence. I don't have to use Ichimoku on my chart, guys, so I'm going to take it off of the chart because everyone thinks that's all I trade, so I want to show you that's not all I trade. Get Ichimoku off the chart because everyone doesn't want to trade Ichimoku either. And especially when Ichimoku is in this kind of a market, it's kind of hard to trade. So I'm looking at the market moving to the downside because it's making lower bull fractals. So therefore, I'm looking to catch some trades here. Well, there were a couple trading opportunities here. All right, so if you draw this trend line in, you won't catch this one probably more than likely. But then there's another one here. You see this? All right, but then we don't even need divergence to catch this trade right here. And then you can see this is a bearish engulfing. All right. But then definitely could catch this trade, and divergence will help you to catch this. But we also have the signal, we have the level, we have the signal, and we had the trigger. And you can see there's another thing that we're getting is the probability booster with this bearish divergence, and then the market moved to the downside. We traded this level here because we had our support and resistance levels drawn in. So we already had this trade in the chat room. And in the forum, we posted this trade right here. We talked about this one and we talked about this trade. We took this trade and we took this trade. So you could catch these trades. Ichimoku's not helping me with some of these trades. That's why I have to take it off the chart and look at my levels. Now I have my levels and I have my signals and I have my triggers. And then I have a probability booster, but I don't always have that. But I still have the three things, my LST, my level, signal, trigger. Okay. So you learned a little something about fractals, but you didn't learn a lot about fractals because let me tell you what, I go really deep about fractals and you could trade these fractals like crazy. All right. But I can't explain it here. I mean, it's all in the members forum. It's all in the courses. These fractals are major. And anybody that is a member with me will tell you how deep these fractals go. So I'm going to go to one more pair. This is the CAD yen. We're going to go to US dollar JPY, and then we'll look at the inside of the website, and then I'll kick you guys out. Okay. Again, we got this level here. So this level is important. I'm kind of waiting for the market to get to this level before I start doing anything, because we're right up at that point. I don't see any divergence that's really telling me which direction to trade this. So I have my level. That's my L. Ichimoku's telling me bearish, but still, in order to be bearish, we got to get through this point, because first of all, the market could do this. Yes, Ichimoku could be telling us the truth, but it also is slower than time, right? The market could do this. Ichimoku's not going to tell us it's going to do that, right? Because the market needs to violate that level. So therefore, you would look at me and say, well, Ichimoku's telling you this, Ichimoku's telling you that. Yes, Ichimoku is telling me that. All right. But basically, I need to see up this level. This level is important. All right. If I go back, look at this level. This level is important, guys. Go back to your left. Look how strong that level is. That level is important. It's more important than Ichimoku. Okay. Okay, I think you get the point, so I'm going to go back to where we were. So this is level is strong, so for me to trade into that level based off of what Ichimoku's telling me wouldn't be a smart thing. And when I lose the trade and wonder why, it's because I didn't know this level was here. All right, so I can't trade with Ichimoku right here. So I'm going to take it off the chart. So now when I look at this, whoops. When I look at this now, it's kind of like a triangle pattern still. And eventually price may get pushed right to the bottom here and then violate to the downside. But until then, we're still getting squashed here. So it's almost like a slinky getting squashed down. And you can see where price is making nice bounces off of your level. Now, we would have marked this level. We wouldn't have really probably got this trade right here, but we would have got this right here based off of support and resistance. So let me show you. And we already got this trade. That's why I can talk about it, because you can see this is a support and resistance level, horizontal. Even though we're looking at this triangle pattern here, we still see the horizontal support and resistance levels. This point here and this point here are making the same level, aren't they? But from here to here, it made a higher high, which was divergence, and the market dropped to the downside. So now we're too close to trade right here. So we need to see what the market's going to do at this point. So therefore we wait. That's why we have levels again. We wait to get to that level. The market's almost there. Be patient and then watch for your price action. So what we'll do when the market gets here, we'll just go to the 4-hour time frame, right? And then we'll look for the entry on the 4-hour time frame, because we want to trade, get our stop loss as tight as we can. And when we use the 4-hour time frame, we get in probably a better stop loss. Now, sometimes I stay with the daily because the 4-hour doesn't tell me enough and it's kind of sloppy. All right. But that's going to be it. I'm going to show you guys really quickly before you get out of here. And then I'm going to give you an opportunity. So this is my website. This is the courses. Got a high probability price action video course. I'm going to take you inside the course. Got Ichimoku Advanced Japanese Techniques course. We got Ichimoku Online regular video course. This is the most important course, the most basic one, and you need this one. It's very important. I wouldn't just jump into this one, but this one has a lot of the stuff that this has, but some other things. We talk about supply and demand, all that. So I'm going to show you inside the courses, one course, and then I'll show you how it looks here. So when you go inside the course, I click the course and I could go into it, right? So this is inside the course. This is the first part of the course, the risk management. Then I take the quiz. Then I go to all about Ichimoku. So you watch this video first. Then you take this quiz. Then you watch this video, you take this quiz, and look at all the course, look at all the units on this. There's a lot on here. All right, this is the one that you really want to understand. You got risk management, all about Ichimoku, price action signals and triggers, TK crossover trade strategy, Kumo breakout, all right, Kijisen bounce and break, trading Ichimoku with fractals. This is major, all right, trading Ichimoku with support and resistance, trading Ichimoku with multiple time frame analysis, and then trading Ichimoku with divergence. We talk about this divergence, and then we talk about Heikin-Ashi candles, trading with Heikin-Ashi candles. You get all of that in this course, all of it, but you got to pass the quiz to move on to the next one. Got to get a 70 on this one. And then the other courses, you got the other courses. I'm not going to show you those. And then you got like the members area here. Now, most of the stuff I haven't been putting in here because I've been putting it on the forum. So I'm going to show you the chat room really quick. This is the chat room. We chat in here. All right. In daytime, we catch a lot of trades, and we have a members notification area. So when I post a trade in here, or whatever I post anything in here, videos or trades, you get it. Right, comes right to your telephone. Ding, ding, ding. There's a trade. Boom. You could see it. All right. And then that's the members chat room. This is going to be the forum right here. And see, most of the things that I put in the forum, this is the free section of the forum up here. Anybody could come there, but members can only see this section here. This is webinar schedules where webinars are. This is trade setups and alerts. Now I moved some of these to my trading journal right here. So you'll see the trade setups in here now, a lot of them, because they're going to be the trade setups that I'm talking about. So I put them in here. I'll show you those in a second. So if you were looking at that, you would go into my area. You'll come into my journal area, and it's going to show you what I'm showing. I was trading with a $100 account to show members that you can increase that $100 account. And before they closed out the account and moved it over to forex.com, I went from 100 to 180, and then they closed it out. So I showed the results in here. That's where you could see that. And here I put my trading plan, but in here I put the trade opportunities. So here was a trade that I talked about, made a video. Some of them I talk about, and then some of them I post a video. Like, let me see, is this one a video? Some of them are videos. No, this isn't a video, but some of them will be videos that you'll watch. It'll only be about a 10-minute video telling you how to enter the trade, where I'm going to enter the trade, and this and that. All right. So that's one thing. And then you also would go to the weekly and daily market reports. Now these come out every day because what we do, we go live. The session that we're doing right now, that I'm doing with you guys, I do this with the members mostly, almost every day, but sometime I don't. But every time we do it, we record it. So you could see here, this one was featuring one of our members, and all we did here, we had a nice session, and then you could come in here and watch it. Here's the video. All these are videos. You just come in here and watch it. That's a 2-hour video right there. And look at all these videos that you can learn a lot of stuff on. All right, there's a lot of learning in here. All right, because that's every day of the market. And then what else do we? There's some educational videos telling you some things that I don't talk about. Like maybe I'm talking about some things with support and resistance. One of my people trade with Elliott Wave, so I let him talk about it in here. And I put price action strategies in here, but I haven't put a lot in there because I do everything in all the videos, so it's hard to do all that. All right, so that's everything that I have, right? So what I do is, if you become a member, you could become a member for a monthly fee, which you pay monthly, $100, or you could become a 6-month member. You pay $500 for 6 months, and then after the second payment, you're a member for life. Or you could pay one time for $1,000. But this is what most people would be doing. I have members that are already lifetime members, so they don't pay anything. All right, but this is what you would look at. And all these memberships, you get the same exact thing. It's just a matter of how long. This is a monthly membership because most people aren't going to want to pay forever or whatever, you know. So you pay for a couple months, you get the information, and then you could cancel your reoccurring fee, and if you decide to come back, you could do it again. Also, if you want to be 6 months, and then after the second 6 months, that's good. You're good for life. You get all the things that I'm talking about here. All right, and then the same thing here, one-time fee, and then you're a member forever. But guys, just look at my prices compared to a lot of people's, and look what I'm offering compared to a lot of people. And I think you'll find that I'm really, really reasonable, because a lot of times I just give my stuff away. People don't really even know that. But to me, I'm not doing it for the finances, but I'm still spending a lot of time doing it. So I don't want to say, well, I can do everything that I do for you guys just for no profit at all, you know, because it's a lot of my time. But let me look at some questions, and then I'm going to get out of here. I'm going to post a link for you to look at this page right here. So if you want to become a member, you could just come in here. All you have to do is whichever one you want to purchase, it'll take you to that page. And all of them are going to be on the same page pretty much. So when you click that, it'll take you to the page. You could sign up, become a member, whichever one you want to do. Okay? It looks like I'm the $1,000 member. All right, but I'm going to take some questions. I'll give you this page. I'll put this in here in case you guys want to come into this and become a member. But basically, it's going to be right there, become a member, FX at one glance. So I'm going to look at some questions, and then I'm going to get out of here. Hopefully, you guys enjoyed it. Hopefully, you learned something. And there's the link that you could look at if you want to come and become a member. Let me see. So no, not too many questions. Just ask me when's the next webinar. The next free webinar, I'm not sure. Okay, but I don't see any questions, so I'm going to end the webinar, but I appreciate you guys. I appreciate your time, and thanks for being members, and thanks for even attending if you're not a member. I'm going to post this video, and hopefully you guys have learned something. And like I said, once again, thank you. God bless you. Have a great one. So long.